Hello and welcome to the big story. Down over 50% in a year and up 30% in just 1 month. Well, that's the BSE Real Estate Index for you in 2011 and 2012. The reasons for last year's fall are all well known. But what has led to this massive recovery in real estate stocks? Is there a fundamental change on the ground? Or is this just about investors looking for value in beaten down stocks? Let's try and decipher that today for you. Joining us to discuss this is a very elite panel here with me. Pranay Vakil, Chairman Knight Frank, Bharat Mody, C.F.O HUBTOWN, and Param Desai joins us. He's a senior research analyst of institutional equities at Nirmal Bang. But before we go to our experts, let's just get a sense of what's really happening on the ground as far as statistics go. Sameepa Shetty and Ruth Saldana, both here, who've studied the numbers to understand this dramatic recovery. Sameepa, you go.
Vivek, first let's take a look at the big fall. The BSE Realty Index in 2011 was down about 52%. The biggest loser, HDI, down about 72%. And then let's track the trajectory of the big recovery that we are seeing currently. The index is higher by nearly 30%. If you see this, the biggest gainer is up nearly 53%. But is there anything fundamental which is really driving this rally upwards? If you believe experts, then nothing really has changed on the ground. In fact, there were no significant launches in the third quarter. The debt burden of many of these companies still remains extremely high. You also have the asset monetization that many of these companies, including DLF, have been practicing, which is still very difficult to execute on the ground. So what really has changed there? Nothing seems to have. In fact, if you look at the quarterly performance that some of these companies have delivered, they're shocking to say the least. India Bulls Realty, profits are down nearly 45%. But how has the stock reacted? The stock has actually gained. It's up around 48% this year. It was down 66% the last year. So it has almost recovered most of its losses from last year. What hit the profits? Interest costs, which were up 27 times. You also have another real estate player right here in Mumbai, Oberoi. In fact, this is the only company which managed to increase prices in third quarter. Their profits halved right there. How has the stock reacted? The stock has gained. The stock is up 17%. It was down 19% last year. So once again, managing to recover most of those losses. And finally, you have another important counter, which has reported its numbers. You've got Godrej Properties, which has performed really well in the last year. Again, in the third quarter, you had profits higher by 85%. The stock was lower just by 2% last year. It's a high by 9%. This is a look at the stock performance for those companies which have delivered their numbers just yet. And you can see the dichotomy. Although the results were lower, the stocks have been gaining this year. And the dichotomy continues when you talk about the demand and pricing sort of situation. In fact, the sales in Mumbai real estate or Mumbai residential space have dipped to near 3-year lows. On a quarter-on-quarter basis, they lost 17%. This is according to Liaisons for us. You also have the unsold inventory, which is at a 44-month high. Experts believe that for any healthy market, the unsold inventory should not exceed 8 months. Now, those are the kind of figures that you're seeing in terms of demand. But what about price? It hasn't actually fallen. In fact, it has risen to a record high of about 10,558 per square feet for the city of Mumbai. The weighted average cost is what I'm referring to at this point in time. So the dichotomy for the real estate sector continues, and experts believe there are certain triggers yet to come which might actually take these stocks higher in the new year. The expected rate cuts from the RBI, that is expected to boost sentiment and demand. Analysts also believe that because a lot of clarity has emerged on the regulatory front, you might see a lot more launches in the first quarter of the coming fiscal. And what are these regulatory clarities that have emerged? You had the DCR norms which were changed, some clarity emerging on the rehabilitation slum redevelopment project of Dharavi. It was expected to boost stocks like HDIL and the likes. So all of these triggers are expected to take these stocks higher as we head into the next quarter.
All right, Sameepa, thanks very much for that. Ruth, let's come across to you now. You tell us what's really going on as far as sales are concerned on the ground.
Well, the experts say that the dichotomy of high pricing and low demand is likely to continue in many major markets, especially for the first half of 2012. Now, the analysts say that several factors have contributed to this, including low availability of funds for developers to construct, high construction costs, especially labor and raw material costs, high interest rates, and unique to the Mumbai market, a virtual drying up of approvals, leading to a standstill in new projects. Now, most of these factors are likely to remain unchanged in the first half of this year, with the exception of one, which is the interest rates. With the RBI appearing to change its high interest rate stance, the buyer sentiment has definitely improved, leading to an uptick in sales from the month of December 2012. This is most visible in cities like Bangalore and the Gurgaon part of the Delhi NCR, where demand is showing slightly higher. However, for markets like Mumbai and Noida, though a slight uptick is visible, the stress on the sector is likely to remain for the first half. Analysts, however, are uniformly bullish on the long-term real estate story and believe that despite the short-term blips, the sector will pick up. As demand has not slowed or vanished, it is merely waiting for a few factors to change before returning.